all of us had our own firms. Nishta was an investment banker, Kozema and Atul had their own firms. They were all 10-year vintage into the profession. And we said, let's kind of test this out. If you're talking about the US, those meetings, you have to write to them in advance, set up the meeting. You can't just show up. It doesn't work. There's no cold calling that happens beyond a point. So I've always learned this technique of business development saying that there's no second chance. So you have the first 3 to 5 minutes to make an impact. We were all in India then. Then in the second year, we started an office in New Jersey. And after 3 years, we moved from New Jersey to Atlanta. So it was Mumbai and Atlanta. So right now, Australia, there's a lot of opportunity. They again have a talent shortage. They were dearth of real practicing professionals. There's nobody who's doing real corporate finance work in Australia. Now, US audit is very complicated. So you got to find a problem statement, define it, and say that do you want to be on that corridor and exploit that? You don't need crores of rupees. It's more an investment of mindset, and it's more about being positive about a market and just do it.
You know, most of us, when we talk about US, we always think about bookkeeping, taxes, and basic fractional CFO, FP&A kind of services. And when I was actually talking to Vaibhav, he says, that there is immense opportunities beyond bookkeeping, beyond taxes, and up the value chain. So today we have with us, as I said, Vaibhav Manek, who's the partner and co-founder at KNAV.
Always happy to share our experience.
So Vaibhav, what you guys have built at KNAV is amazing. So would you want to share a little bit about what was the motivation of starting KNAV? So who's the K and an A?
Somewhere in 97, late, early 98, I just qualified as a CA a couple of years back then, and I just happened to see an ad, and I saw that the CPA program can now be done in India. The CPA program basically meant that, I could basically have an international qualification. When I ended up going for that kind of batch, I met almost 30-40 people. This was one of the first batches actually in India in 97 or 98. And in that group, 4 of us, that is Kozema, Nishta, Atul, and I, we connected when we flew off to the US for our exams. 3 of them were fairly senior to me, all married with families. So they were going to come to the US for a short exam time back, whereas I ended up spending a couple of months after my exam. And that's when I realized that can we bring some of this US tech in accounting in India. So for example, US GAAP, the generally accepted accounting principles, was something which was very new then. Very, very few people knew it existed in India, and very few of them actually practiced. There were seldom, maybe 2 or 3 firms. So we saw until there an opportunity, and which we keep seeing even today, even after 26, 27 years. So the motivation was, let's bring US GAAP, for example, as a new thing in India, and try and work with some of our clients. Now, all of us had our own firms. Nishta was an investment banker, Kozema and Atul had their own firms. I had just started my firm. They were all 10-year vintage into the profession. And we said, let's kind of test this out. And therefore, in January 1999, we formed KNAV with a simple vision that can we, bring some of the US accounting concepts, accounting terms, taxation, corporate finance into India. As an Indian company expands to the US, we should be then the first choice firm to help them set up in the US. After being set up, provide basic accounting, auditing, taxation, and then over time we added advisory services. So that's how we kind of started up. And then, of course, we kept adding services, concepts, year on year, month after month, and that's how we created a proper full service accounting firm.
I actually expected you guys to have studied together and then, decided, hey, let's start a firm. But as you said, some things just happened. So how did you get together and structure it?
Look, we didn't do anything fancy. We said, let's start working together. We'll just share the pie equally, get a partnership firm in place and just start working. We'll figure out, as the firm grows. But a decade later, we moved to a model called pay for performance, which means that, just by being a founding partner, I'm not entitled to things. I have to be working, I have to be contributing, I have to be providing my share of the value, and my compensation, my partner units, my equity should reflect that. Today, it's been about 15 years after we implemented the model, and I can proudly tell you, we may have some junior partners who make much more than the senior partners, really performance driven. And as long as people understand and they value teamwork, they value working together. So that's how we kind of differentiated ourselves. That really it's about performance, it's about merit. Yes, seniority helps, experience helps, qualifications help, those are essentials. But that doesn't mean that one can sit on the laurels. One has to constantly evolve.
Vaibhav, I want to ask you, what was the first year, second, or the first 3 or 5 years at KNAV when you guys started? How were the first few clients?
We started in Mumbai. We were all in India then. Then in the second year, we started an office in New Jersey. And after 3 years, we moved from New Jersey to Atlanta. So these were the first 5 years. But Atlanta, just because the weather was better. New Jersey was too cold throughout the year, almost 7-8 months. Since our strategic intent was to work with Indian companies back then, as they were expanding. 2 of us were here and we were focusing on the Indian multinationals. And then my partners who moved there were looking at their US subsidiaries. So it was a very kind of detailed, very thought through model then. And we quickly understood that there's a big gap there.
When you talk about KNAV, US, UK, how did you all expand into these different geographies? That's one. Okay, and what was your team size when you all expanded?
We started working in the first month in the US. We didn't move till, so we all used to travel. All four of us were traveling in and out, back and forth, did some work, got the right visas, and then we said, now it's time to set up a practice. Then we moved there. We went there because of an economic reason, and the reason was simple: the client wanted services there. So if I were to say ABC Group in India, a large multinational group, expanded to UK. Now we were servicing ABC in US and India. They said, guys, can you help us in UK? So of course, we went there, learned there. Some of us took the exams, got licensed, worked with local firms, understood it, and built a firm there. So it was typically a client-driven growth. And then the opportunities came because of certain treaties that India signed with some of these countries. And as India started expanding, a lot of Indian companies, Indian multinationals started expanding in these countries. We saw a natural influx of client inquiries. So we just followed our clients. That's the way we think. We have never gone and set up a company, set up a entity in a country, and then said, now let's generate business. Now this is a corporate financing. If one has the skill sets, it's a global product. But please be licensed in whichever country. You have to be SEC FINRA registered to be practicing this profession in the US. Similarly, auditing. One can audit everywhere, but one should be available, one should be regulated, licensed, and registered in a particular country to be signing off on an audit report. Taxation is knowledge driven. Some countries expect you to be registered to sign a tax return. Some countries you can just give advisory here. Advisory you can do from here. Compliance is very driven by a country. So you can choose that, and that's how you grow in a country. It's very, very specific to the profession, because if we are accountants, we are a licensed profession. Okay? We don't expect a lawyer to come and practice accounting, just like an accountant can't go and practice law. So one should be certified and licensed to be able to offer that service. Once you do that, then sky is the limit. Just amazing options available.
Okay, what has been the challenges in KNAV's journey? I mean, and what are the pivots you started?
Challenges is a word which is we've lived that it's every day, every part of the way. But some of the key challenges obviously are, sometimes growth can get stagnant. Sometimes there are challenges of regulatory. Sometimes challenges of immigration. Sometimes there are challenges of competition. Sometimes some clients may feel that we are expensive when relative to a local firm. So obviously you'll have each of these challenges. But the way to think about it is, it's not a zero-sum game. It's not a winner-take-all kind of a market. There's enough opportunities. You lose 20% client, you'll get 30-40% more. Client churn is important. So there are challenges of client acquisition, challenges of client growth. And I think if one stays true to your technical prowess, you will keep mining and doing better in the same client. Then there are challenges of the whole ecosystem. Now today, regulatory overreach in certain countries, like NFRA in India, SEC in the US, they did a few years back. So one has to be therefore at the top of one's game. One can't take any attitude that, okay, I'll create an audit file later, let's just sign off an audit report, I'll do it later. There's no later. If you are in the business of auditing, in the profession of auditing, every document has to be before you sign off. Or your audit file has to be as clean, as thorough as it can be. Don't sign off your name because it's a big risk that you're taking. So there are these challenges, but one can very easily kind of overcome them with the right set of process and more important, the right mindset. There'll be people challenges always. We are the business people profession. So one has to then have a right set of culture, good performance appraisal systems, pay well, pay at market, sometimes above market. You attract the right talent. It's a vicious thing. When you get the right talent, they will make the firm grow faster. The firm keeps investing in that. You keep rewarding them with nice wealth creation opportunities. We, for example, have a long-term incentive plan, much like options. So we reward every individual once they spend certain time in the firm. They have kind of an options or unit plan available. Try and bring that differences over time. You may not be able to do it on day one, but over time one has to bring some best practices. And that's where one can create a sustainable, institutionalized offering in accounting. Believe me, there's enough money in accounting. It may look very boring on the outside, but internally, if you grow your practice well, it's as big as any other profession.
So there's KNAV US, KNAV UK, KNAV India, Netherlands, Canada, right? So what's the team split? What's the service line across geographies and?
We have the three buckets. There's audit, there is tax, and there's advisory. These are the three large buckets as KNAV. Now within audit and within tax and within advisory, we have various sub-service lines. So let me start with audit first. Now audit for us is country level audits. Now as a firm, we have scaled up to 7 countries, started up US and India, then we expanded to UK, Canada, Netherlands, then came Singapore, and now Philippines. So each of these countries, obviously we do a lot of local audits, but we also do a lot of international audits. So let's take a case of an Indian multinational company. When an Indian multinational company grows or expands outside of India, they do need high credible set of auditors. Today, it is mandated by even under FEMA rules by Reserve Bank of India that a subsidiary company needs audited accounts by a local auditor for APR filing, for compliance. And when we do an audit in the US, Chantal, it's a very detailed set of processes and procedures, and there's a very high level of assurance. Much like in India, much like in UK, many countries. So audit is one. Then, of course, other than the financial and stat audit, there is internal audits, there is management audit, there are specific purpose audits. For example, a funded company expects inventory reviews or expects fixed assets review. The special purpose audits, one may call it due diligence, one may call it forensics. So depending on, let's say, a bank who has lent money to a company, they engage us for a forensics audit. That did the money go where it was supposed to go? And then when it talk about diligence, right, a lot of investors and a lot of on the buy side engage us for a formal diligence to do quality of earnings review, QE as we call it, do a proper revenue review, look at the financial statements and say what has gone wrong or what can go wrong or what is really going right and how can we kind of as investors help in that. We look at forecasts, projections, and look at trends and say whether the business will be able to grow here. And that impacts the valuation of a deal. So a lot of our work within audits also financial diligence. Then that brings me to tax. Now tax, again, international tax, transfer pricing, structuring, ensuring that the effective tax rate, the ETR as we call it, is optimized. Now, when we say optimized, it doesn't become nil always. If you're doing good, if you're making money, you have to pay tax. The question is, can you plan your structure in a way which is legally compliant? It's compliant with DAR, compliant with BEPS, compliant with the Pillar 1, Pillar 2 expectations, and you pay the right amount of tax in the right jurisdictions. That's what the firm focuses on. We're not very aggressive at all. We don't like to cut corners. We don't want to have liability and litigation for clients because that philosophy just doesn't work in our system. We like to be compliant, yet there are opportunities for tax planning, for legitimate tax planning one should explore. Treaty planning, making sure that the right economic substance is there, making sure that the right documentation is there. So the tax service line is very, very focused on helping clients comply, more importantly, save on tax, and third, have a very strong tax documentation. So if we are doing compliance work, we ensure that along with the tax filing or the tax return, the client knows and signs off on the tax position letter, which means that the client is aware of what tax positions have been taken. If a deduction has been taken, why? If it has not been taken, why? So tomorrow, after 3 years, whether KNAV exists or some other partner is there or whoever has done the work, there's continuity in why a position was taken. And that is very important. These are basic things. Even in audit, Chantal, one of the things that auditors miss out is issuing a high quality management letter. One is to issue an audit report, which management beyond a point doesn't look. They say, okay, it's true and fair reviews, everything's great. But there are always faults, there are always material weaknesses, internal control failures, or there are rooms for improvement. So that's a management letter, as most of the people in the audience are aware. We don't issue an audit report till a management letter is very judiciously kind of kept ready, discussed with the audit committee, discussed with those charged with governance. And that again, differentiates the firm's product offering. So that's audit and tax. Then there is advisory. Now, advisory is a very large, wide term. But we are focused on 4 or 5 things there. We have a client accounting and advisory practice, which is basically helping the whole finance outsourcing to take place as a virtual CFO, where we have CFO plus and CFO advisory services, then going down accounting, MIS, investor reporting, creating the right data points and using a lot of data analytics to predict where is the business really going. Then we have business advisory services. That's something which is very passionate to me. I lead that service line, helping businesses to think about growth, helping them to think about strategy, think about business planning. And that's so critical. Sometimes we don't give even emphasis. Sometimes our clients don't give enough emphasis to business planning. And that is the difference between how fast you can scale. So you don't have to set up a company in a country always. You can do with setting up, having joint ventures, having partnerships, having agencies, having distributors, having warehouses. But there comes a time in the evolution of the business that you have to be there. You have to have an entity there. You can build locally. So business advisory services is all about helping businesses taking those right decisions. After setting up a presence there, helping grow that presence, including a potential acquisition opportunity, mergers and acquisitions as we call it. Basically adding customers and helping grow the business. Then the third is an investment bank. We have a very robust corporate finance team. We help clients think through M&A, think through raising capital, think through even divesting businesses which are not doing well. So both buy side and sell side, we do a lot of work. And then there's valuation services within advisory. Now, valuation is basically financial reporting valuation, but also a lot of these special reviews. Within valuation, there are complex securities valuation, there are compliance-related valuation for regulatory. Here in India, the Ministry of Company Affairs, under Companies Act, you need a valuation. You need a valuation for FEMA and RBI purposes. You need it for a lot of regulatory issues and filings. Sometimes for income tax purposes, you have a special requirement as to whether it was a fair valued. So we have a whole valuation team that focuses on this. Lastly, we have risk advisory, which is basically risk controls, SOX advisory, making sure that the right controls are in place so that businesses do well. We have various partners who are focused. And to put your second question on the team around it, so we have teams which are structured basis service lines, and we actually cut across all geographies. So to give an example, we have client accounting advisory services in the Bay Area. We have them in London, have them in India, have them in Singapore. So these are teams which are the same teams working same function, but they have separate clients, and they work together as one large unit. We call it one firm. We don't think of ourselves geographically that we are sitting in separate offices. No, it's a global delivery model. So, for example, the US client will be delivered from India. A UK client may be delivered locally, or from Philippines, or from Singapore, or from India. So, depending on where the economics make sense. Obviously, we don't want to pay, or we don't want to be servicing accounting from Bay Area to a Bay Area client. Doesn't make sense. Companies, BFSI. There are teams that focus on pharmaceutical companies, healthcare companies, life sciences companies. We have teams that focus on auto components, industrials. We have teams that focus on services, technology, entrepreneur models. We have teams that focus on PVC funded companies.
What if I want to start, say in the US, okay? What service line should I focus on? One or two most profitable or in-demand service lines which you say, start with this.
So I will say advisory services. Without batting an eyelid, I straight away say that. One can always do audit, one can always do taxation, but that's beaten, that's there. We know that AI at some point is going to become so strong that it'll kind of take away the whole margin game there. And with more and more, tech differentiators and disruptions, I think what will survive and what will do really well across surveys and across conferences we keep hearing and we keep discussing is advisory services. Now, of course, finance is important, and therefore financial advisory will be the core of most of us. But one can even wear a hat of a strategic advisor, business advisor, help the business take the right decisions in every which way, whether it's resource allocation, whether it's expansion, international growth, whether it's people decisions. If some people are adventurous and they've had a good background, they're even marketing decisions. Today, a lot of startups end up bleeding because they're just spending tons and tons of money in performance marketing. So very important that one can start focusing on specific areas. We use fancy terms like business process reengineering, management consulting. Of course, you have the McKinsey's doing so well. But even before we get there, basic advisory would be being a trusted advisor to a business, to the founder, even to the investors who are funding the business, and try and understand where the business is growing. Can we benchmark with business plans? Can we do a good budgeting exercise? Can we ensure that the growth that was planned, and see, not everything goes as per plan, but can there be a pivot? So advisory services is something which I'm very, very bullish on, which I see. So if one looks at the next 5 years chart, there's enough and more data which says that advisory is growing between 25 to 30% across countries. Audit is growing between 10 to 15%. Taxation will be again 15-20%. So the fastest growing is advisory, including, I would say, accounting advisory. There's so many things that one can do beyond the traditional accounting as well. So that's something which I think if somebody were to start today, start with that, with the low-hanging fruit.
You said accounting advisory. Would you want to tell us what are the activities in accounting advisory? What are the low-hanging fruits?
So let's start with the whole design of an accounting system. In India we use Tally. In the US we use QuickBooks. In somewhere else we use Sage. As a business scale, you may use NetSuite, SAP, Oracle, etc. Right? Now, the key there is the accounting system design. So as a chartered accountant, one can actually help businesses to have the right design in accounting. How should the accounting masters look like? What is the MIS that one needs? So accounting advisory is all about getting the right data to the decision makers to be able to take the right financing decisions, the right business decisions. For example, AR reports. How should the accounts receivable be structured as a function within the whole thing? How should sundry debtors, as we call it, or accounts receivable, as we call it, how should the follow-ups happen? Should it be automated? Can it be automated? Of course it can. Therefore, what is the design there? The design thinking around it. How often should the automating emailers go out? Should the business team do it? Should the system do it? And then how do you bring down and control the working capital cycle there? Similarly with accounts payable, similarly with various functional aspects of a financial statement. And that is where again accounting advisory comes in. Lastly, I would say investors expect proper MIS on a monthly basis, proper meetings on a quarterly basis, very detailed reviews between 3 to 6 months, and even the annual reviews for capital allocation, etc. I think a chartered accountant can play a very important role because a CA understands numbers like nobody. So how do you kind of bring the right investment reports, the right MIS for decision making on further investments? I think those are some crucial accounting advisory things that one can focus on. And remember, one can charge well. So gone are the days of just a simple hourly rate or a basic fixed fee rate. And for a good quality set of reliable financial statements and accurate MIS, one can charge very well. Now that is something which one should aspire to and focus on. And with the right team members, that can be achieved.
How do you actually come in touch with these clients? Okay, like okay, you're in India, they're in the US. What's the starting point?
So the starting point is show up, be there. Right? One should plan a proper itinerary. So if one is confident about the product or service, have a good marketing credential pack. Make sure you have a proper profile of your firm, of the key team members, of the service offerings, and what is unique about your service offering. Have a proper, it could be even a PowerPoint presentation, it could be a Word file. Then second, look at events, seminars, conferences, evening chats, coffee chats. Attend, show up there, ask questions, network there. Networking doesn't harm. You'll always meet 10 more people, 30 more people, and you can broaden the horizon. Third, meet referral sources, be it bankers, be it lawyers, be it other accounting firms. Meet as many CPA firms that you can. If you're talking about the US, now for those meetings, you have to write to them in advance, set up the meetings. You can't just show up. It doesn't work. There's no cold calling that happens beyond a point. But if you can write to them at least 2, 3, 4 weeks in advance, that look, September 15 to September 20, I'm in New York. September 20 to September 25, I'm in California. Make a trip. And then people will, 8 on 10, 7 on 10 will say, okay, guys, let's meet for coffee. They may change it, they may edit it, but more or less, if somebody's committed a time, they will meet you. That's your half an hour, that's your 20 minutes to make the most impact. Remember, so I always learned this technique of business development saying that there's no second chance, which means this is the only chance you have. The 20 minutes, in that also, you have the first 3 to 5 minutes to make an impact. If you can't create an impact in first 3 to 5 minutes, you have lost the meeting. The rest is all coffee, conceptual, nothing much is going to happen. So what you say, what you speak, has to be very, very well researched. Remember, one size is not, one suit doesn't fit always. Make sure you have separate pitches for separate meetings. If you're meeting a law firm, there is a very high possibility they'll transfer financial clients to you, accounting clients to you, tax clients to you, provided you can reciprocate by giving them legal work. If you're meeting a CPA firm, it will be about outsourcing, or how you can enable them, how you can augment them. If you're meeting a banker or a VC or a P, you can talk about diligences. So you got to have a pitch prepared for every meeting. It can't be one general email going to everybody. It doesn't work. People don't want to read a very fancy 5-para email. Send a very short 3-4 sentences, but attach your profile, attach your credentials, do a LinkedIn invite, try and see if you can, kind of touch base, understand who he or she knows, use references, and then your chances of hitting the right meeting will be very high. So the probability of meeting should be at least 70-80%. You will never be 100%. But out of 10 emails or 10 outreaches, you should get 6, 7, 8 meetings.
In the initial journey while exploring the US market, is it possible to start with advisory services? That's one. And because those services can be provided only when you build some brand in the market with a portfolio of some US clients. So what's your take on it?
When I say advisory focus, doesn't mean that you should not do anything else. Of course, if you have a very good tax base, or let's say tax is your forte, forget advisory, focus on tax advisory. So focus on M&A and tax. Focus on the incremental things, the value-add things within your chosen circle of competence. You can't be good at everything. Very few professionals are very good auditors and very good tax professionals and very good advisors. Doesn't work. That will happen in partnerships. So if you are starting up, pick your area of expertise, start developing client relations there, do your networking, the same steps apply. You will get work. There's enough, because I'll tell you right now, US, for example, is dealing with talent shortages. There is a huge attrition. There are recruitment challenges. They want the right professionals, and that's not happening. There's a lot of technological challenges, right? Technological advancement. The older firms are finding it difficult to keep pace. A lot of M&A and consolidation is happening, which means some of the larger PE funds are buying out, controlling stakes in larger firms. Partners are retiring, and this is a time of big upheaval. And that's where it's leveling the playing field. And that's where perhaps there's no better time than today to start our overseas practice. Now, if you look at India, Australia, for example, right? Now, Australia, again, Chantal, in the public event, we did mention there's a lot of opportunities. They are going to have a talent shortage. They are the real practicing professionals. There's nobody who's doing real corporate finance work in Australia. Very few auditors. Taxes, what everybody does. Even US, very few people do audits. Now, US audit is very complicated. So you got to find a problem statement, define it, and say that, do you want to be on that corridor and exploit that? And then be true to that purpose. Don't be under the temptation of doing everything and anything. That doesn't get you value. I think one has to have a very clear roadmap on what one can be confident of delivering. And once you have that, that's the solution for a problem that you're trying to address. So it's take your time. There's no need to rush, but one has to identify that sweet spot. So you'll see good clients coming your way. Because believe me, the sky is the oyster. Just so many companies, so many businesses. And if you play the corridor business, even better, even bigger.
When you say corridor business, what does it mean?
So US-India corridor, UK-India corridor. So say, remember, Chantal, and this for everybody, there'll be enough professionals in every country. But the corridor, which is what KNAV chose, that if you can be on the Indo-UK, Indo-Singapore, Indo-Canada, even UAE, Riyadh, Australia, Japan, look at the countries where this advisory is lacking. You can pick up one country and be the best of that. We know of clients, Chantal, who only work with one firm in India when they come from Japan. So there are Japan, India specialists, corridor specialists. So this is a strategy. Doesn't mean this is the only way to go, but if you are good at that, chances are you'll keep excelling every year because you're talking that language. It takes 2, 3, 4 years to build a relationship with one client in Japan. You have to show up every 3 to 6 months. It's after 10 meetings that you'll perhaps consider, the client will consider to give you some work. But once they give you work, they are there for life. It's a loyalty business. Very different from US, very different from UK, but sometimes can be very transactional. They look at your knowledge curve and they'll sign you off and they'll take a chance. If you perform, they'll work with you. The day you don't perform, you're cut out. So that's very kind of cultural to some of these countries. So one has to be then careful of choosing the right jurisdiction. And let me tell you, UAE itself, after the taxation that has come, as we know, GST has come, now corporate income tax has come. Soon there will be personal income tax. Huge opportunities across the 7 Emirates of UAE. A lot of the GCC countries, including Saudi, etc. For Saudi is expanding like anything. There's so many opportunities coming there, and they don't have good accountants. So each of these countries, I think there are some specific opportunities one can exploit. Again, sky is the oyster. One can't be looking at 100 countries or 20 countries or even 5 countries. Pick up one, then pick up the second. Build expertise. I think that's where you keep building on your core competence.
How do you manage operations for cross-border teams, and what kind of tech platforms are relevant?
It is really what you want to do, what profession or what service line. If it's audit, we, for example, are using a global audit tool. Okay, this is basically a Thomson Reuters audit platform. So everybody performing audit in the firm has to use the same license platform. It doesn't matter which country's audit you are doing. So that is point number one. The auditing standards are pretty consistent. International auditing standards and the Indian auditing standards and the US pretty consistent. But we tweak some of the paperwork, some of the working papers that one may need. Additionally, we use a tool for AI called MindBridge that helps us to do our audits better. So every audit client of a particular size and above, we will use MindBridge as an audit tool. We keep adding tools or keep adding platforms each year. For example, we may use a confirmation tool for audit confirmations. We may use a data sharing platform. We use Suralink. We have moved beyond Google Drive. These are more kind of platforms which are in terms of data privacy, data accuracy, sharing, ease, all of that is better. Keep evaluating good platforms, but to start with a consistent audit, paperless audit tool is very, very critical. This idea in CASEware for data analytics, for making sure the right sampling is done, and for really good quality audit documentation. So that's about audit. When it comes to tax, there are obviously global databases available for transfer pricing, be it S&P, be it Capital IQ, be it Provis in India. Every country has got its own database, but there are global database that one can use for competition benchmarking. Tax compliance, of course, is very relative to every country. There are good tools available for tax return preparation, etc. When it comes to corporate finance and valuation, again, there are amazing databases available. We, as a firm, tend to invest in some good quality tech platforms. These are all licensed platforms. It's sometimes pay-per-use, but largely these are licensed for the year. And that's how you kind of build a tech-driven kind of practice where everybody across the country or across the whichever country we are present in has to use the platform. So nobody can do manual audits, for example. Audits are all paperless, electronic, and the audit tools are consistent. I hope, Anshul, that answers your question, but happy to help on.
Cool. Thanks, Vaibhav. Also, this question, is it possible if you start a firm, say, in 1 or 2 years, 3 years, with, say, 2 to 3 crores of revenue and with a small team of 5 people, like, you can just start with this and it's possible to enter the US market?
No, absolutely. See, the size doesn't matter. The question is one qualified to enter the US market? Is one licensed? And one can start, we all started somewhere with 1 client or 2 clients. Yeah. We were lucky that in our first week we got 18 clients. It just happened because right time and right solution. But that same thing today, look at GST. GST is a new subject in India, just few years, right? There are people who have created huge practices from service tax and sales tax, they move to GST, and they've become GST experts. Look at FEMA and RBI, like Foreign Exchange Management Act in India. There are specialists only on FEMA and Reserve Bank of India, planning, compliances, all of that. Every area. So, and look at IFRS, relatively new area. So there is opportunity, which actually I would say levels the playing field.
So Vaibhav, could you advise? What is your closing advice? That's one. And how long does it take? Or what should be the budget you have if you want to go to the US back and forth?
You don't need crores of rupees. The travel costs are what we know. Yes, one has to sustain the initial months till you get your first clients there, and one has to be able to invest a little bit. It's more an investment of mindset, and it's more about being positive about the market and just do it. There is no reason why, with all the hard work we do passing our chartered accountancy exams, and with all the hustle and bustle of everyday compliance, the compliance season, and with all the client expectations that we can manage here, there's no reason why we can't manage in a foreign country. I hope gentle that gives some food for thought.
Thank you so much, Vaibhav. Thanks a lot for your time, and thank you everyone for joining in.